our performance, I'm doing kind of like a recap from 2019 through 2024. As most of you know, you've kind of joined and grown with us along the way. We've had 4 Reg D Rockstar funds, and I'm gonna hold on. Let's see if I can get Bill's screen blocked here real quick because he's showing up. There we go. Our total contributions currently in Rockstar Capital Group are $54,504 and or 54,504,791. We currently have a total unreturned capital, meaning this is what's active, is 52,320,159. In the last 6 years through 2024 so far, that does not include our distributions from Q4 yet. However, we've done $19,787,715 in distributions to our investors. As preferred and LP upside, that was 16,288,863. For the RCG management and GP upside, that was $1,314,220. Again, that is from inception through 2024 Q3 accounting. That would mean that the distributions to limited partners has been about 92.5% over that 6 years and 7.5% to GP and management operations. Our average annual ROI paid out to LPs, because of the fact we've had multiple funds and then a merger in 2023 into the Reg A offering. But if we go back and look at the total, we've been able to hit around a 12% to as high as a 16.5% total payout to LPs in that time frame. Currently, the 2024 blended interest average, and again, I'm still working on accounting. These numbers change every day with notes and entries and the whole gamut of accounting and bookkeeping and reconciliations. But we're looking at a blended average earnings of roughly 20.67% for 2024. And that could change when we finalize our accounting for Q4. Currently, with that 52 million that's active, we're looking at about 6.55 million is tied to land or lot notes. We have assignments, which is on projects. That's again another form of note or loan that we have out there at about 8.65 million. We have subscriptions in investments that run. It's a small percentage, but it's about 450,000. This is in real estate projects. And our notes and mortgages currently at about 30 million, 0.15 roughly. Again, I'll send this out to everybody. And then we have equity positions, which are projects that, and remember, initially we started out as actually buying projects in Rockstar One. So it'll all make sense when we get all of our, well, as you know, we do third-party annual audits now, which we have already started sending up all of our information for our audit for 2024. But those equity positions are about 6.5. And this is what makes up the total of roughly $52 million of active capital invested in Rockstar Capital Group. So the good thing is we have notes, mortgages, land, lots, assignments, subscriptions. Everything is tied to being lent out, being active and working in the Rockstar Capital Group. All right. One thing that I wanted to make note of is that we're doing some transitioning this year, and we have discussed that before, where our operations are going to be pushing more towards loaning and lending to the BRD land operations, which is, which we'll have Mo come on talk about here in just a little bit, is our stronger. Hold on, I got to mute a couple. It's our stronger operation that is moving into some seriously significant numbers. little less brain damage and just more on that whole in and out at dirt concept that we like to welcome into our operations. And I'll let him talk about that. But as a note, we're getting away from the scattered lots through lending to our other partners of Buller River and Estero Developments. Just letting you know, they are putting packages of lots up for sale that, and I'll send this out, but there is currently a contract that I've signed on that is 102 lots to be sold in Cape Coral, Florida for $4.48 million. They are currently in negotiations on another 32 lots with, these are home sales or lot sales that are going to Lennar Homes, one of the biggest builders in the country. That is 32 lots. Currently, it's about an $878,000 negotiation, but we expect that number to go up as they're looking at more land. They also have a total of 162 lot package that they're putting up for sale in Northport, 145, and that's for 5.98 million. 145 lot package in Lee County for 5.279 million, and 178 lot package in Charlotte County for 6.4 million. So right now they're looking at turning a lot of the scattered lots that have been held and financed and lent on over the years for a total of 23 million and some change. That once all those projects or those lot packages start to sell and close out, and this will happen throughout the year, that'll be money that will be coming back into Rockstar Capital, of course, paying out interest to investors, and we'll turn and start funding and loaning to BRD land on a higher scale to help them with their growth. So I'm excited about that. It's a little bit of a transition. It's a transition and move towards, more of a direction that we've all been pretty excited about because we see just how much BRD land is growing. Another reason that we're going to have them talk and discuss, what's going on in the land of BRD land. No pun intended. Next thing I want to talk about is we have had an uptick in redemptions. We've actually put that out just to give you a little bit of an idea of how we've looked for redemptions from 2019 through 2022, the entire 4 years there. We only had a request for $269,000 in redemptions. In 2022, under the Rockstar Capital 2 operation, we had a $350,000 redemption request, and that was on about $20 million of active capital. In Rockstar Capital Development Group 2 and 3, which was roughly at the time around 8.24 million, we had 0 redemptions in 2022. When we merged all of the Rockstar operations into Rockstar Capital Group, we went into 2023 as under Rockstar Capital Group, our total redemption request was 618,000. And one of the things I'm pointing this out for is to know that while it is an option, I just wanted to kind of have you see the scale of those redemption requests. In 2024, we had a pretty large uptick, and this was mostly due to, unfortunately, not everybody has been as successful as Rockstar Capital Group in their operations in real estate or other syndications or fund managers or investment opportunities. And we've got multiple investors that have invested in other projects, some of those not going so well, and we'll just kind of leave it at that. And it's required them to reach out to us to kind of help in their cash crunch and make sure that they're able to, take care of their businesses, take care of their families, and take care of their obligations or investments. And that total redemption for 2024 that we have paid out, mostly in the second half of the year, was $1.8 million and some change. We do still have another $2 million of redemption requests that are in, and we're working to facilitate those as projects close, as notes close. But it is a pretty big uptick because we're basically looking at just under $4 million in redemption request in 2024 when we only had 618,000 in 2023. So certainly unfortunate. We always hope that all of our Rockstar investors have great investments in their portfolio and that things don't go as planned. But it's the nature of the beast sometimes. And just glad that we've been able to be there to kind of help these investors out. So I'll leave that again. That'll be a slide that'll be something that we'll send out to everybody. One of the reasons I wanted to point that out is it is affecting our final year-end accounting, making it a little bit more difficult because of the mergers, because of the K1s that we have to put together, because of the issues we had with our K1s this year, which was kind of a frustration for both us and our partners, our strategic partners, because we've both had to deal with new, larger CPA firms from the growth. And there was just some things that went back and forth and frustrating for all of us. But hopefully we've got through all that now. And, we're going into 2025 with a positive attitude. So a lot of growth, a lot of excitement, a lot of opportunity. We're hoping that 2025 is going to be one of our best years yet with Rockstar Capital Group and also with BRD Land. And as we shift away from the smaller scattered lot deals and new construction that happens under those two arms, as they're shifting towards the larger operations, we're all getting pretty excited about what is happening. And again, I'm not stealing the thunder for BRD Land. Absolutely looking forward to them to coming on and talking here in just a couple of minutes. All right. So from there, I want to also point out that a lot of you guys have been asking for this. We finally have got to the point where we understand how we can do that inside of our Appfolio Rockstar portal. But we are launching what we call the DRIP plan. That is the dividend reinvestment plan. And we're going to send an email out on that soon. This is where you will have the option to go in and choose to have your dividends or distributions be added to your investment so you can compound and grow that asset and not have to worry about the ins and the outs of distribution into your portfolio or into your bank accounts or your IRAs. Now, this is an option, meaning for those of you that rely on Rockstar Capital Group distributions as part of your passive income or your retirement, it's there. But you also have the option to, for a lot of you, and we've had so many of you and so grateful for the trust and support that you've put in our operations and what we're growing, that love to add to your investment, or you're always telling me, I don't want the money back, just put it to work and let's keep it working. So we are launching the dividend reinvestment plan. We call that DRIP. There will be an email going out for that soon. It will be effective for all of Q1. So even though we're a little late to roll it out, once you choose it and then come at the end of Q1, this will be something that will be in place and effective for you. This also eliminates having to worry about wiring up new funds or waiting till your accounts build up or trying to choose the ACH, which, by the way, in talking with their banks, apparently there's some stuff going down with ACH where fraud is on the rise and banks are getting nervous about being able to automatically debit from investors' accounts. Had a very long discussion with our current bank on that, and they have told me that there is, and I'm forgetting the exact terminology, but some attorney somewhere took somebody to court because a person that had a company debit their account from ACH came back later and stated that they weren't supposed to do it. And that fell back on the bank and that person, that business. And it's apparently a thing that people can go back and say, hey, they weren't supposed to take money out of my account for 2 years, or at least it's got a 2-year window. And anyway, it's a kind of a pain in the butt. But okay, so that's something that we're excited about. I know a lot of you guys have been asking for it. Again, watch for that to come out here shortly. And that will be an option that you can actually choose. Just please follow the steps that our admin team sends when they send that email out so that you can get signed up for that. Getting close to the end of our accounting, again, it's a lot more complicated. We've gotten a lot bigger. We have, of course, Rockstar Capital Group. We have the Rockstar Land Invest, and we have the Rockstar BFR Invest. We now have full-blown third-party CPA audits. We have many more investors, and we're going through all our reconciliations. We know that we're a little bit delayed on getting our Q4 distributions out. I am hopeful that we'll have everything wrapped up and ready to go out by next week. Please don't hold me to a certain date because on our end, it's quite complicated. But we're getting there. We're really close. And that is the goal, is to have those be going out sometime next week. All right. I don't want to take any more time because I definitely want to get Mo and Jerry on here to share what's been going on with BRD Land. This is what we're excited about. So I'm going to go ahead and turn this over to Mo and Jerry and make sure, hopefully, that I've got sharing. Okay. Mo, I have multiple participants can share.
Okay.
So see if you and Jerry can do that.
All right. Well, 1 second here. Hope everyone is doing well this afternoon. Jerry, do you want to share your screen?
Yeah, sure. Hang on just a second.
While she's pulling that up, I just want to again thank everybody for the call for the time this afternoon for the call. We are here, Mo Johnson, Maurice Johnson. For those of us we haven't met yet, I'm the CEO and a partner with BRD Land and Invest. Just finishing up actually my first full fiscal year in the role. Came on summer of 2023 from Meritage Homes. Really excited and proud to talk about some of the things that we've been able to accomplish in 2024, what we are looking to accomplish in 2025 and in the future. So real quick before Jerry goes in and talks about our 2024 results, one thing to do. I want to highlight the fact that we are still in the process of closing the 2024 books and finalizing the accounts, et cetera, as you guys might know. If anybody coming from the world that I come from, the public world, that you're typically not close your year-end books until the end of the first month of the next month, so end of January typically. But we wanted to get this out and have this dialogue and conversation with everyone, kind of in terms of where we are. 2024 was a great year for us in terms of top line revenue and the like, and so. Without further ado, I'll turn it over to Jerry. She can kind of talk about the 2024 results as it relates to and how it compares back to what we talked about on our call a couple of months ago. I think we had a call in early October as we were beginning Q4. Q4 was a big year for us, and so it was a big quarter for us. We intended it. It was a bigger quarter. We thought it was going to be a bigger quarter going into it. But it still was a very, very successful quarter, and we'll talk a little bit about it a little bit. So, Jerry, I'll give it to you.
Hey, good afternoon, everybody. Can you guys see my screen okay?
Yes.
Okay, great.
I can.
So let's go over with let's start with the 2024 results. As Mo said, we had a great year. This has been our best year from a gross revenue and a gross profit to date. So it's been fantastic. So, we didn't meet our plan. We originally had forecasted 109 million with a gross profit of 20 million. So we fell short. We ended up at 68.7 million for gross revenue with a gross profit of 12.5 million. We're holding a gross profit margin of 18%, which is pretty much in line with what we had forecasted. Like I said, unfortunately, we didn't hit our target. The two main drivers for that were that we had two big projects that didn't close in Q4 that have shifted to 2025. They're still very active projects. They just, due to some delays in engineering and utilities, we pushed them into 2025. So unfortunately, it meant that we weren't able to get 33 million on Warden and 9.8 of gross revenue on Lanes Ferry. But overall, we still ended up with a really positive finish for the year, and we're looking for some great projects and great results in 2025. Do you guys have any questions on the 2024 results? Okay.
I'm looking at the chat. I don't see any yet, but I'll let you know if they pop up.
Yeah.
Okay.
And we can,
Okay.
as they come up, Brandon, if you could just mind the chat for any questions on BRD L,
You bet.
just jump in. So yeah, just to kind of give you some kind of overview on 2024, the changes, right? In what we're seeing more and more is we'll have some conversations here later, and David Kalosis will be on, has joined us as well. We'll talk a little about the state of the market, so on and so forth. But one of the things that we continue to see, and it's become more and more intensified, is builders are looking to do asset light. The demand for land is there in a voracious way, and you'll see that in several of the research that we put in here. However, what they're really looking to do is do asset light. And so what that means is they want to be able to take it as close to going vertical on a house as possible. Whereas, going raw obviously is the farthest away, right? And then you have zoned, and then you have engineered, then you have infrastructure improvements, and then obviously finished lot where you're just going vertical. Well, builders are trying to push towards that. And so what we are doing at BRD is we're constantly looking to drive and look to see how we can refine our product offering to get better and better and closer to what they're looking for. We've got great projects and we've got great demand for all of our projects. What we're trying to do is continue to turn up not only both the supply of our pipeline and growing our pipeline, but then we're also driving towards breaking our projects down, like large projects like a Warden Station and the like, or even Lanes Ferry. As you can see, Warden Station was a bulk transaction. It was all 3,200 lots at one transaction, whereas Lanes Ferry is one. It's a 2,500 lot project, and we've got that broken down into pods, and we're going to be delivering infrastructure and selling pods to builders as we kind of work through it. So what we're doing, I wanted to highlight that because you're going to see some more precedent as we move down in the deck, and you've probably read some things about some of our customers, D.R. Horton, Lennar, and other groups. It's spinning off operations to basically become spinning off operations to have a company that will be able to deliver them and allow them for just-in-time inventory. So just wanted to kind of highlight that piece as we kind of look to, from a BRD perspective, what that's going to do in turn for us is as we continue to go, because we're getting year 5 of our operations 2024 is right. As we continue to go, what you'll begin to start to see is not as many large projects in terms of concentrations of our revenue as we kind of move through, and you'll start to see pods going off 200 lots, 300 lots, 100 lots, that type of thing that will kind of start to level out our revenues as we continue to try to refine our process as we move forward. So the next slide is just our pipeline. And we talk about this. This is our pipeline in Q4 in terms of just the forecasted revenue from a paper lot perspective. Those are our pipeline. So about just under $900 million worth of our pipeline is under control, meaning that we have it under contract or we own it. Under contract with the land seller or we own it, meaning that BRDL drives that. And that's just on the paper lot revenue perspective, $900 million. In terms of active LOIs that we have right now, there's another $289 million worth of land that we're actually trading paper on with land sellers, and we hope to get most of that under contract as quickly as possible. And then there's another $328 million worth of land that we are targeting throughout our footprint of Carolinas, Florida, Georgia, and Texas. Going down to the next slide, the next slide is real important to me because to me, as an operator, whether it's the land and development business or the home building business, what's real important to me is, okay, well, of all the land that you have in your pipeline, where is it at in the process? Like, how close is it to that ability to transact? And what's real important to us is, if you were to look at this slide basically takes all of those, the $900 million worth of land that's under control, and it breaks it down in terms of where that land is in the entitlement phase. And if you look at this slide and you look and you say, okay, where are we at? 58%. So 2/3 of our controlled land is zoned and engineered. Meaning that we're in the process of doing engineering, the heavy lifting, going through value engineering the projects. We do that now on every project that we have. We don't just take a project and just ram it through. We've gone through each process with engineers, with site contractors, with our IDCs. We've even brought a couple of builders in to kind of look at some of our projects and see where there's some opportunities where builders can go get premiums and things like that. again, what we are looking to do, our compelling value proposition is we are looking to refine and and deliver a product that builders will look at, and as soon as they get a BRD project, they take it off the shelf and they're ready to go in 90 days. And so to say that we've got essentially 2/3 of our pipeline is zoned and engineered, that it's zoned and going through the engineering process is great, which means that if you look at our revenue projections over the next 2 years, typically if a project is once this project zoned, it should be ready to close within 15 months to 18 months. And so our next 18 months revenue projection, which Jerry will share with you here pretty shortly at the end, are pretty promising. And that's the support for it in terms of if you look at, again, our assets and our balance sheet and the like. So the next part, I wanted to just talk a little bit about the market, a little bit about some market research in terms of what are the trends, what are we hearing, so on and so forth, as we end 2024, go into 2025. I'm just going to highlight a couple of slides from John Burns, who, if any of you guys have done any home building, any type of construction products research and the like, John Burns is one of the preeminent market research providers in the country. And we subscribe to John Burns at a national on a national level. BRDL does. So we get a lot of this information in the surveys and things that they provide. And again, this is like this slide here, where builders are identified that finished lot supply is the biggest challenge to increase in supply of new homes if demand increases. That continues to be the number one piece, right? I think back in our COVID years in 2020, we saw issues with supply chain and things like that were causing some delays. Concern about supply chain. Can't build a house. Used to build a house in 110 days. Now I can't build a house under 240 days. That's starting. Builders have been able to figure that piece out. The problem now is getting finished lots, right? Getting lots all the way through to where they can go vertical on them. And you can see that that is still significantly there. The next slide really talks about kind of where it is, like the demand, like the hotness. This is kind of a heat map, if you will, in terms of what are the hottest regions in for residential lots and land. And the midpoint from a nation is 3.1. If you look, the green is Q3 of 2024, the blue is Q3 of 2023. Midpoint for 2024 is 3.1. As everyone knows, BRDL we're concentrated in the Southeast, Carolinas, Florida, Georgia, and Texas. And if you look at where we are, you look at the Southeast at 3.3. You look over and you see Texas and Florida at 2.7 and 2.7. Again, that's one might say, well, wait a minute, why is Florida and Texas, why are they not as hot as everyone else or as hot as the nation? You have to look at the supply and look at the numerator, if you will. Anybody that understands percentages and the like, right? If the numerator is larger, a change might not be as significant. If you think about, if you just break down Texas for an example, Houston is one of the largest home building markets in the country, 50,000 plus or minus permits a year. And so if Houston has a voracious demand for land, and so an increase in Houston of 10% is 55,000. Whereas if you're looking at the Northeast, which basically there's no land available, that 4.0 is significant, but the numerator is mighty, mighty small. So don't misinterpret the Texas and Florida at 2.7s as though those markets are cool and builders aren't still selling houses well. They definitely are. And David will speak to it here in a bit. And so with that, what I want to do is I want to turn it over to David Kalosis. And just before he goes into his bio and kind of talks about himself, David, you are on the call, right?
Yes, I am, Mo.
Perfect. Before David gets in, I just want to take an opportunity to just let you guys know, just from my perspective, I've known David since 2005 when I was the corporate controller from Maurice Homes back in Atlanta. David is amongst the home building circles, and he's the person that everybody goes to if you really want to find out what's going on, whether or not the good, the bad, the ugly. He's seen if there's something in this country within the home building and land space that's happened. David's seen it, heard about it at an intimate level. every person, most of the people that I know in this space that are looking to do, they kind of have their internal group where their guys tell them, oh, this is a great project, or this is a great opportunity. We need to move forward because of X, Y, and Z. You always have to have a guy that you can go to that's going to give you non-biased, independent, impartial data to support your assumptions and your business thesis. And that's one of the things that David brings, and has always been able to do it, and in a way that really makes sense from both an operator's perspective in terms of the people trying to go make money and assess the highest and best use and look at efficiencies and look at strategy in terms of what's your short-term and long-term strategy, but then also as an investor. If I'm an investor and I want to go invest in a company that does land, a potential home builder, a company that does development and the like, David does a great job of, and he's been commissioned to do assessments on builders and other companies that were targets of a larger builder or a different company for M&A type of transactions. And so when we say trusted residential and commercial real estate advisors for sale and build to rent, I can assure you that David is one of the best, if not the best. So with that, I want to turn it over to David so he can share a little bit about some of the things that we're doing together. Because in 2020, the end of 2023, beginning of 2024, BRDL and Strategic Insights formed a partnership where we're leveraging David significantly on assessing our portfolio and looking over our shoulder to assess all of our operational and strategic transactions as it relates to our projects. So David?
Thanks, Mo. And Mo, can you hear me okay?
Okay, yes.
Just want to make sure.
Great.
And nice to meet you, Brandon and investors. Good afternoon, ladies and gentlemen. I'm David Kalosis with Strategic Insights. We are a market research and consulting company. We work with builders, developers, and the capital behind them on projects throughout the Southeast, Florida, and Texas markets. We provide, as Mo alluded to, independent market guided recommendations for them. I help our clients to understand the markets that they serve. Again, we bring independent market guided recommendations on locations and products that are really supported by the fundamentals. So oftentimes in our industry and in all industries, you get driven by financial performance. We kind of reverse engineer, and our clients come to us to tell us what is the real demand like. As the slide alludes to here, we cover, we do feasibility studies for clients. We do anything from large national home builders to local builders, again, developers and the capital behind them. We do market entry studies. We help to guide them on repositioning studies. But again, our core target area is the Southeast US. It's the Florida markets and it's the Texas markets. I'm based in Atlanta, but our coverage area, again, being the Southeast Florida and Texas, is very similar footprint to where BRD is looking at land today. And there's a very good reason why both of us are here in these regions, is based on the core fundamentals that Mo alluded to. And in a second, I'll dig into those a little bit more if we want to slide through here. I don't want to spend too much time on the background of us, other than to say, you know, I cut my teeth in the home building industry in 2000 for a large national home builder called Pulte Homes, where I headed up strategy for the Southeast US. I started Strategic Insights in 2007. We were acquired by John Burns Real Estate Consulting that Mo alluded to in 2014, had a 3-year earnout and took my clients back on the own. Again, this is a list of a majority, but not all of the clients that we have worked with over the past 17 years that we've been in business. I guess 18 years now, not to age myself too much in here, but again, a good representation of the national, regional, and local home builders who would be buying lots from BRD in the markets that we serve here in the Southeast. If you want to scroll down on here, please. Again, our goal here is, Mo reached out to me at the end of 2013 once he got established on board and said, hey, David, how can we work together? How can you help us to think more strategically on the go forward basis? So the idea was that we would build a successful land strategy together that is, and build and refine, I would say, because now that we've gotten more into it, we want to help refine this strategy. From our side, Strategic Insights side, we bring independent market guided recommendations on locations and products that are really, they're supported by strong fundamental demand. When I say strong fundamental demand, it's are these locations in good, strong, healthy markets with strong population growth, economic fundamentals? Those are the things. You got to have population growth. You have to have a strong economy in order to drive strong housing demand. And is there strong demand for that housing in those markets today? Is it projected to continue to grow? That'll feed our demand pipeline and thus builder demand for the lots that Mo is putting on the ground here or entitling in the process. If we want to scroll through here, with this partnership that where Mo reached out to me again at the end of 2023, by 2024, it's kind of a three-legged stool approach that we've done, that we've worked on with BRD. The first leg is independently reviewing each of the individual assets within the BRD land portfolio. To date, if I were to say my number is 42 on a number of large projects. Mo's probably got a higher number that I don't know about yet. But of the 42 assets, just in the last year, we reviewed 15 of those assets. And Mo, my background is not my office. You know, I'm always out here in the field. So I'm in Somerville, South Carolina this hour. Just stopped at your Harleyville project. I was in Greenville yesterday looking at a project. So we're boots on the ground. I think that's what makes us different is you don't understand the strength or appeal of a project without boots on the ground, without looking at the project, without shopping the competitors in the market, without understanding who the buyers are. We look at the demographics underlying it. We look at the housing demand. We look at the competitive positioning, and we look at the location itself to drive our recommendations on product, price, and pace that determines the potential success of a community. So again, we've represented we've reviewed 15 projects just in this past year. But those 15 projects represent 40% of the total lots in the portfolio to date. And just this month, Mo has approved us going out and looking at another 6 projects that'll bring another 7,800 lots into this fold that we're reviewing currently right now. So that's our first leg, is to understand the assets that we have. The second leg, as part of that understanding, is to do a complete risk assessment profile. And Mo and I have worked on this where we developed what I would call a risk assessment model, where we look at each of these assets and we try to understand what are the inherent risks with these projects. Is it in a large market, in a large metro that, again, has the core fundamentals that we need? Where is the site located within that market? What are the competitors doing in that market? Are they performing very well? Is it a soft market today from housing demand? And then what is our position in that market? What kind of products are we bringing to the market? What we do is we grade each of those assets on 10 key variables that just tells us internally what is our risk associated. Now, you know, in all things, especially investments, there's risk and there's opportunity. And so a project that might have a higher risk could also have a higher reward. So it's not an exclusive grading that says, yes, go forward with the deal, or no, absolutely drop the deal. But it lets us know how we might want to approach that deal from, do we just want to, the risk is higher. Do we just want to entitle it? Do we want to make sure our contract is strong with the builders who are looking at this deal? Or if it's a very low risk, do we want to hold out to maximize the returns? Do we want to go through the entitlement process? Do we want to develop the infrastructure? Do we want to deliver just-in-time lots? And do we want to wait in that process till we can get the maximum value or return for that? Basically, through our analysis of these 42 assets, 85% of the portfolio is within either primary, which I would consider top 20 largest housing markets in the country, or secondary markets here in the Southeast. So again, 85%. So the portfolio is very well located in terms of being in the right metros where the demand is. Half of these assets have a below average risk associated with them, which means there shouldn't be any headwinds. It means the fundamentals are there. It means the buyer demand is there, and it means the builder demand is there. And another third have at least an average risk associated with it. So you have less than 15% of the assets really at the end of the day that have any real significant risks or headwinds associated with them. And then the third leg of our stool is to work proactively on new projects. So kind of getting ahead before we get too far in the contract and entitlement process, making sure that, are these the right deals? Are the right fundamentals there? Have we design the community in the right way to fit the buyer demand in the market. And so just making sure that we're stepping in earlier in this process. You can go ahead and advance it here. You know, and I think of this, I went to the University of Kentucky, so and still have all my teeth, but we're big SEC fans. And so when I was thinking of like, what is our strategy here? It's really an SEC strategy. Where Mo's been looking is the Carolinas, Georgia, and Texas today. Also where we've got deals under contract, but also digging and sniffing and working through deals in Florida today. There's the potential in Tennessee to expand from there. These are the markets that you want to be in. U-Haul just released last week an article on the top states for in-migration. So they look at how many U-Hauls are going to a town versus how many U-Hauls are leaving that town. And the top 5 states for in-migration today are South Carolina, Texas, North Carolina, Florida, and Tennessee. And just so you guys know, South Carolina and North Carolina are new this year to the top 5. So it really shows that we are at the forefront in these locations in the Southeast, the forefront of where folks are moving to today, which is creating the core demand that we need. If you want to scroll forward, just to reiterate that, I just threw a couple of slides of data that we had handy in talking with Mo and what we might want to share. This is a list, and I know it's going to be hard for people to see other screens, but this is the list of the top 50 largest new home markets. So that's how much volume of new home sales annually are going on in these markets. And just next to these markets, I identified with a red star, those where we have, of the 42 deals, where we have contracts in those markets. And the blue is where there are searches going on today in those markets. At the end of the day, what it says is, I think it's 7 out of the top 10 markets, 7 out of the top 10 housing markets, we've either identified deals or have deals under contract today. 10 out of the top 20 and half out of the top 25 markets, we've either got deals in them today, contracted, or are looking at deals in those markets. And just to get a second opinion on it, the next slide shows very similarly, US News released, they haven't released their 2024 numbers yet, but from 2023, they had their hottest kind of housing market index. And again, very similar when you look at that, of the top 20 markets, we're in more than half, we're looking at deals or have contracted deals in more than half of the top 20 housing markets in the country right now. So we're in the right markets to be serving where the demand is naturally there. The demand being core fundamentals of population and economy, which drives housing demand, which drives builder demand for our products. I'll take a breather from that, Mo, and pass it over to you.
Does anyone have any questions of David while he's on? And
watching the chat.
Yeah, and listen, feel free, guys, to send us, send me, Jerry, any questions or anything you might have, and I can get it over to David. I mean, really, I mean, easy guy. I want to man. Obviously, as he told you, we've got him running pretty hard. And David, he owns a company, and he's out in the field talking to sales agents and doing, firsthand reconnaissance and research on our projects and stuff. So this is I hope that everyone appreciates the level of diligence and scrutiny that not only BRDL we're doing on our projects, but our partners are as well, because this is top 10 home builder type of diligence. This isn't just some 2 guys in a truck kind of work that's getting put forth to really try to protect you guys' investment in BRDL. So just real quick, this slide that's up right here is important because I think what we've done thus far, right? We talked about what happened in 2024, talked about our record year and our celebratory and kind of how things were. We definitely did not hit the goals that we wanted to hit. We wanted 2024 to be a 9-figure revenue year. Everything was teed up that way, but we've had, obviously challenges with, timeline, entitlements, so on and so forth and the like. Still, we were able to generate $68+ million of revenue, positive gross profit, hold our gross profit, and we were able to do some really remarkable things. And as you look at where we are, and you look at what David just mentioned, the demand in the markets that we've strategically picked to operate in. We're in the right markets where there's demand and there's undersupply. We talked about our top land we talked about our land pipeline of the $900 million worth of controlled land that we have in our pipeline. So you've got that piece in terms of the product. Really, then what's next is kind of process, right? And then give me some type of proof of concept. And what we know as a group, as a BRDL management, what we know is that everybody, most people on the call has invested in this company from the ground floor. And we appreciate that investment. And what we want to do here is let you know and see that the big builders, the top builder in the country and the number 2 builder in the country, have both signed off on this proof of concept, and they essentially have created their own BRDL by virtue of buying and acquiring two companies. D.R. Horton purchased Forestar back in 2017, and all Forestar does is basically they're a land banker, the developer on behalf of D.R. Horton. When I was working at Meritage, I tried to do several deals and purchase land from Forestar. Several folks that actually work for me are now division presidents at Forestar in different parts of the Southeast. And they are beholden to D.R. Horton through various operational agreements, so on and so forth. Very obviously, with very, very well capitalized. D.R. Horton founded them. I think they have a capital stack of $1 billion or $800 million. Lennar just recently, in the last couple of months, spun off Millrose properties. And Millrose is doing the same thing for Lennar that D.R. Horton is, that Forestar is doing for D.R. Horton. They are delivering them. They're holding lots off of Lennar's books. They're delivering them entitled lots. They're delivering them developed lots and the like. And it gives Lennar the ability to just pick and choose the deals that their spinoff or their sister company have. And then the last one is Brookfield Coulter. And the reason I want to highlight that just happened, I think it just came out in late November, early December. Jim Harvey is the president of Coulter Land. I've known Jim for over a decade, since actually about 12 years since I was my first division president job back in Orlando and Jacksonville in 2011. Jim is Coulter Land is a developer. They are a sister company of Coulter Homes, which, if any of you guys have heard of Crestwind, which is an active adult community. Coulter is not, they're affiliated with Coulter Homes, but they're a different entity. Much like BRDL, we are a different entity from the other groups. But Coulter Land, had a partnership or strategic partnership where they were doing some specific deals with Brookfield. And what Brookfield decided to do is they wanted to start to take it on a larger scale and purchase some of the platform and create a strategic programmatic joint venture at setting a facility. I don't know what the exact facility is, but I think it's definitely something over. It's well over $100 million facility that they have, where they're literally going through and looking at projects, and they're rolling through and doing programmatic joint ventures. That's a proof of concept of what BRDL is doing. Coulter has been their developer. They've been developing lots. They sell lots to builders just like we do, so on and so forth. The difference is they've been a developer from the beginning. We have not developed in the past. But so if you look at kind of what is BRD and how does BRD compare to these guys? BRD is a company that we have the opportunity. We have a great land sourcing engine. If you look at the land that we've sourced, look at what we sourced, look at the $900 million in revenue that we've been able to source, look at the 60,000 lot pipeline we've been able to source, and we've been able to do it with a whole lot less in terms of from a capital perspective to some of these other guys. Look at what we've been able to do to get these entitlements through. We've got 2/3 of our pipeline is already through zoning and engineering, ready to go. And then the next thing you got is look at our team. You've got a team of professionals that are running BRDL between myself, between Cisco Garcia, who I've mentioned to you guys in our October call, Jerry Thompson, and we've got a crew of Rebecca Treadway. We've got a crew of professionals from home builders, from developers and the like, and we'll continue to grow and get better and bring more people on as we continue to just perfect and fine tune what we're doing. And I think so. Really and truly, I wanted to just show you guys just the proof of concept of what BRD's value proposition, what we can do, and how as we continue to grow and we continue to just refine our process, things will get better and better. So moving to the next slide, we'll talk a little bit about 2025 and kind of where we are. 2025, again, you see this is our initial business plan. It's draft. Our business planning process. Basically, what we do is we do a draft process through Q4, and then in the first 60 days of the year, we finalize that after closing the previous year's books. Then we look at where things are, look at our timeline, so on and so forth, refine things based on the closed books from the previous year, and we expect to have a finalized 2025 business plan in about 30 days from today. But what we're looking at right now is we're looking at a year just under 200 million in revenue. As you saw again by looking at our pipeline, about a little over 17,000 lots are zoned and engineered, and that was as of the middle of the quarter. And we're saying we're showing right now we'll close just under 9,000 lots. We'll have a slight uptick in gross profit from 2024, up from 19% in 2024 to 26% in 2025. Again, this is draft. We'll be refining it once we flesh this out and have a final 2025 business plan. There'll be more information to come, and we'll share a little more with you later. And so with that, I'll close my mouth and allow you guys to ask questions.
Mo, I do have a question from Mitch. He said, can you see these land development spinoffs putting pressure on BRDL, or i.e., can they do what Walmart did to small town retailers to BRDL? Won't we eventually lose those large builders as customers?
No, we won't, because a couple of things. No, we won't, because number one, we've got control of the land, right? One of the things we're doing is obviously we're not being beholden to the other builders is a key thing. Now, the bad part of that is them the reason they're beholden to Lennar and D.R. Horton is because Lennar and D.R. Horton have big balance sheets, right? And they have a lot of capital and the like. And we've taken for all the baseball fans, the American League Baseball approach in terms of singles and doubles to fund our operations in our entity. And as you guys know, Rockstar has been a big help for us since the beginning. And what we're doing is we're continuing to grow and expand that in terms of our capital stack and structure. We are institutionalized, guys. And we've got some more things that we need to do to truly have our process to a point where it's literally almost like going to a trading desk and the like, where the project in Houston, the diligence and the work and the process that goes around how we buy and acquire and entitle a project in Houston is done the exact same in Charlotte, is done the exact same in Atlanta, so on and so forth. But we have everything laid out. If we shared some of our smart sheet system, our ops manual, and the things that we've been, Jerry and the rest of the team have been diligently at work at over the last 15 months, we have that there. And the reason that's so important is because when we start talking about large capital, we start talking about institutionalized capital, the thesis is there. It is important, right? The demand part is there and everything, but what they really want to know is how are you doing it from an operational perspective? How are you looking at the day-to-day stuff? What are your control measures? What are your segregations duties? What are the things you do on a day in and day out basis? And what I'm telling you is BRDL, we've been ahead of that and we've seen that. One of the things that when I talked to Tim and Lindsay before coming over here in early 2023 was there had to be a willingness to roll our sleeves up and do this thing by the book and do the work that the builders need to do. Because what we want to do in order for our projects, in order for us to not fall victim to the Walmart approach in Mitch's question, which is a great question, is our execution has to be flawless. And while we're definitely not flawless today, a lot of it is because we just don't have the team just yet that we're working on to building as we kind of continue to grow. And but we are well on our way, and we're definitely well past 50% to get there. Our IDCs have embraced it, with Cisco coming in, bringing some of his big builder background, my background, Jerry's background, Rebecca, so on and so forth. We continue to get there. Once we're able to continue to refine that and bring in some larger capital that really can allow us the ability to bring the things in that we need, then we will definitely, and you take that ability to source land significantly better than the 4-stars and the Millroses and the Brookfields, then the sky's the limit. And the reason I said that piece at the end, Mitch, about sourcing land better than those guys do is one thing that anybody in the business will tell you when you talk about those groups, the 4-stars and Millrose and the like, they don't source the land, meaning that they're not the guys that are actually out there knocking on the doors and tying the land up. What they really are is they're a balance sheet mechanism for those builders. And so the builders are out there sourcing the land. So really and truly, when you start talking about the competition around getting and acquiring the land, the competition hasn't changed. We're still fighting our customers in terms of trying to get the land first. What's happened is our customers have gotten they have a vehicle where they can park the land that they tie up to go do this. Well, what we are doing is we've got this ability to source it. As we continue to refine our process, we're going to have more and more capabilities to be able to provide builders even more opportunities to park.
Stephen asked, do you have any institutional investors at this time?
We don't have, we have a couple, we have a private equity group that's invested in some of our SPEs, but we don't have any institutional investors today at this time. But we are in conversations with some.
And Mo, can you also talk about if you were to look at the pipeline that BRD Land has now, where does that actually place you in national builder status, so to speak?
Oh, I haven't been able to update that. I shared that in back in our October. Great question, Brandon. I shared that in our October webinar, and I haven't been able to update that since then. I'm waiting on the Q4 results. I typically do that. I've been trying to do that twice a year. But as of this summer, that put us as we would have been ranked in terms of land. We were ahead of the 17th largest home builder in the country, which is Beazer Homes. Our pipeline of 58,000 lots. So
yeah.
So yeah,
Somebody got excited.
yeah, that's right. So we're listen. We are I mean, if we decided and we went out and raised capital and did what we needed to do to say, you know what, we want to start building houses again. This David approach, what David's doing with our portfolio analysis and the like. We are trying to get to a point where we are beyond, we can take things all the way through the continuum if we need to. We obviously don't want to do that. We want to continue to sell lots. We want to sell our land as quickly as we can sell it. So we can sell paper lots. We want to do that. But we have some projects where it just makes more sense to keep going and do some horizontal. That doesn't mean BRDL has to do it. That could be a strategic partnership with a developer. And we've got several developers, site contractors and the like that would love the opportunity to keep their machinery working on our projects. And so, but what it takes to be able to do that is number one, first and foremost, it takes alignment with our capital partners, which is you guys, here on this call. You guys have to understand the vision and understand what you have and what you guys got in on the ground floor of, which is an organization that 100%, make no bones about it, is solving a major problem from the largest home builders in the country have. And so what we're doing is solving a major need. What it takes though is not something easy. It's hard work. It's like David has said, he's in Somerville. He was in Greenville yesterday. It's a full contact sport. We roll our sleeves up every day. We go to work and we grind. This is not a fun, like, where we just go have cocktails and things like that and have fancy lunches. Buying land and entitling land and negotiating these contracts with these builders and stuff is an everyday thing. And what you got is you got a team that's very passionate about doing it and making it happen. It's coming in second is the first loser is how we look at things. So.
Which brings up a good point, everybody. When you're reaching out to us with your questions or not waiting for market updates or reports from us, which we're working hard to get better at and more consistent now to you. If you look at the BRD Land team, you look at the Rockstar team, we should easily be probably 5 times the amount of team members that we are now on each of our operations. And but we're keeping it small at this time and growing smartly so that we keep our costs down and continue to deliver, results for our investors. But we're working on growing those operations and streamlining everything. Just know that we all love what we do. We work some crazy hours. I try not to email a lot of people when I'm actually up, because you'd be shocked at what time you're getting those emails. And I know Mo and a lot of the team over at BRD Land is the same way. So, and even with Lindsay out in New Zealand, well, if we get emails from him, it'd be flat up in the middle of the night every night, because, they're in a different time zone. But, okay. I'm not seeing a whole lot of questions on here. Again, this is a recorded webinar, so we will share it. We will share some PowerPoints and some slides. And Mo, someone asked if we could just get an idea of the markets that BRD Land is in. So maybe just kind of like the cities, roughly how many projects or lots. A pipeline report that kind of breaks that down a little bit would be great.
We can do that. We can do that. And then, David's slide where he starred and asterisk the markets, I think can also give you kind of a higher level as well. Brandon Sheets had a question about actions and processes that can be implemented to ensure timely entitlement. I want to, and Brandon, I see you answered that. I want to just kind of highlight that as well. First of all, Mr. Sheets, great question. There are actions and processes that can be implemented to improve to improve our entitlement accuracy and things like that. One of the things about entitlements, just like Brandon mentioned, it's not just politics. There's also, just from a staff perspective, in terms of what happens in a town. You have a town manager or an entitlement manager that gets recruited by a home builder or someone else, and then you get a new person that comes in, and there are new questions that come up as it relates to the engineering and so on and so forth. But we definitely have implemented processes and things. For example, I mentioned our smart sheets and how we allow our engineers to help drive our schedule, and we have access and viewpoints. We can see what the project task list is on every project in terms of what's out there. When we're literally signing a deal up, we make sure we can back into a timeline that will get us to full shovel ready and engineered lots before the deal goes through. But before we sign the deal up, when it comes to how we leverage our attorneys and our counsel, whether it's our land use attorneys that are negotiating these development agreements with the local water and sewer authorities, or the local municipalities, whether it's our contract attorneys and the like. We have several things in reports within our system to give us, risk assessments as to where things are and how we're moving through the process. And the other piece too that I mentioned at the very top of the conversation, I don't know if you caught this, but we're looking at taking our projects, some of our larger projects, and trying to break them down into more bite-sized chunks, which will help hedge and reduce some of the lumpiness of the revenue and the cash flows in terms of instead of trying to do a 3,000 lot transaction, a 300 lot transaction, counting on that as our revenue versus a 3,000, where in the event if there is a timeline delay, it's not as impactful as the larger ones are.
Kind of like the $33 million sale being pushed from July into 2025. So,
Yep.
Okay, we do have another webinar right behind this. So we're going to have to go ahead and cut this one out. David, thank you for coming on. Jerry and Mo, always great to talk to you, even though we talk every week. But thank you for all the extra input, and everybody that joined, thank you. We will be doing a recording and sending that out. We'll also send out some PowerPoints and kind of like the sheets that you saw on here on somebody else's screen, not mine, because I couldn't figure it out, but I'll get you my slide. And again, thank you, everybody. We're still always growing. Rockstar Capital Group can still take new investments. The more we raise on our end, the stronger we make BRD Land, so they can continue to grow that pipeline, lock up ground before anybody else gets to it. And who knows, if we have a really strong first or second quarter, maybe we might be tapping into Tennessee. And then we got all the states that David was saying are the best states in the country to buy in. So thank you again, everybody. I'm going to go ahead and end the meeting now and give myself a few minutes to close this and get the second one open.